Hello, this is Coach Mike from WinningStockCoach.com. Going to get started with my weekly market overview video for this upcoming trading week, the week beginning August 10th, 2015. Um, the past couple weeks have been a little bit interesting. We're going to start here with the SPX, that's the S&P 500 weekly chart. We basically this past week made back everything we had gained the week before, and we are in a bit of a consolidation range. I was telling members in our chat room on Friday of a point that I wouldn't be surprised for them to tap it on Friday and leave us just wondering where we will be going for the week ahead. And they kind of did that. At this point in time, our support level 2079.65 held on the weekly close. It didn't hold by much with the weekly close of 2077.57. But, in reality, that line there, that line I have at 2076.78, that really is going to serve as, I guess you could call it an over-under line. A positive move with this upcoming week gives us a pretty good risk profile, meaning that should it fail this line, you would need to exit out of the longs that you were entering. And should it fail the line, you've got still what I believe would be some intermediate or short-term short plays. And, really for target points on that, we'd look at 2053.40. I know I got this 2046.97, but I'm still really sticking to that 2022.07 target area that I've been talking about for a long time. That's just where I feel we'll kind of head up. I think it'll make it look like it's going to come down and fail lows here, but I won't be surprised at all to see any short, and that's only if it fails this line, being really a short-term play. So, one thing we can say very, very easily here, by the way, is this consolidation range we've been in, and really it's been since March, February, March, we haven't gotten anywhere, up or down. And in a consolidation range, you either need to stay clear or you need to be very, very short-term in your mindset for your trades. Don't seek the moon and have an exit signal right before you and fail to catch that exit signal because you're still seeking the moon. You might get the moon on some here and there, but stick with consistency. Over now to the DJI, that's the Dow Jones Industrial Average. You actually see two of my Fibonacci target points that I had. Both were actually hit this past week. Now that does lead me to believe that based on the current chart pattern, we might make a little bit of an up move, and that up move for me would be expected to be around 17,712, to 715, something in that area. And any down move right now is going to be at first limited with a support level of 17,164.95. So if you get an up move, this could be the one to definitely play the up move off of. But understand that of all of the indice charts right now, your DJI is actually the one showing the most bearishness. If you recall the SPX chart I just talked about, we were talking about the consolidation range, and then you look here at the DJI, and that consolidation range was failed a couple weeks ago. We retested as resistance what was support before in that consolidation range, and kind of confirmed that as our resistance by pulling back this past week. If I had to take a guess, I would be guessing for a down move in the upcoming week. But that doesn't mean you can't get a green move at the start of the week before the down move starts. And that's where, I won't say a fear, but that's where the confusion comes for me, because when I look at it, I look at, in a perfect world, if you could actually plan perfect trades, you would want an up move from here that gave a lower high, so that you could just easily enter the short. But I also know the importance of this support level right here, and also our proximity to this support, to where it's not going to produce a lot of good short trades in DJI stocks until the support has failed. But also the importance of that support should it fail to give a very hefty downside. So really, I believe this week ahead could be one of two things: a little bit boring or really fun. And I don't think it'll be anything in between. Now moving over to the RUT, Russell 2000, small cap index. A few weeks ago, we put this 1205.88 target on it. We also talked about the importance of holding this swing high at 1215.21. We've talked about that pretty much since the springtime. With this past week's close, we failed that, but again, ended up right on that Fibonacci support target to where, in reality, I would like to see it make an up move. I would like it to come up to 1260 or so. But I don't know necessarily that that's what we get. Because of the weekly close in the Russell 2000, we've really got a view of value of 1217.52 as our resistance point, and any further downside, look at short trades or put options to enter. And we're probably going to have to be looking at this next swing low point down here at 1152.45. So this one actually could be a decent one should it continue downwards. Finally, over here to the NDX, that's the NASDAQ 100. We talked for several weeks about a slow, painful ride. I've been talking about it since February. Slow, painful ride up to 46.90. And that's really what it was through all this consolidation and then a pop. Well, this past week, we actually failed this swing high point at 45.3678, meaning we have to delete that from our chart. And even though this chart is still making higher highs and higher lows, which to me would say if we were going to get an up move, I'd be looking for bullish trades in the NDX because it's the most bullish formation of a chart of the other indices. But any further downside here could actually give just a bit more than the SPX or the DJI by going with the NASDAQ 100 stocks and looking at a support level 44.20.15. Now, if we get to that 44.20.15, it's going to be a little confusion in it because though it'll still be primarily a bullish chart, to meet the lowest close before that high and really do, a double bottom essentially, it's going to leave a little question on where that next high is, whether it's higher or lower, to determine really any longevity of bullishness or bearishness in the NDX. So generally speaking, if you find that the markets are going up, the NDX is offering the highest probability with the formation of the chart still being a bullish chart. If we get opportunities to the short side, you've got a little bit more room till the first support point on the Dow to where you might want to let that happen and then play the continuation. The Russell 2000 ended up right at a target point we've talked about for it, and thus a failure of that could be more of a momentum trade. And the SPX really needs to figure itself out a little bit. So, again, if you're looking to the long side, look within the NDX. If you're looking to the short side, the DJI or the RUT. This is Coach Mike with WinningStockCoach.com, wishing you the best of luck in the upcoming trading week. Good luck to you and God bless.